Welcome back to the program. Today we are seeing a new step in the escalation of the trade war between the United States and China. Trump raising the tariffs on China to 245%. That comes, of course, after the last round of tariff increase, which saw China retaliate. And now we are seeing things actually seem to cool down a little bit after this latest news, as China is signaling its willingness to perhaps engage in negotiation. Let's go right away into the announcements here. As you can see, the White House announcing China facing 245% tariffs on select goods. You know, of course, this comes after last week and the announcement that some of electronics coming from China would be exempt temporarily of the tariffs. And we'll have to see exactly what these 245% tariffs, which goods they concern. But as of now, this is the news. And now the other news, of course, coming after that. China opens the door for re-engaging Trump in trade talks, and they're laying out a few conditions to engage in these trade talks. The first one is you have to show more respect. The number two is you have to have some consistency, because on one side, Trump is saying one thing, then some of the White House advisors are saying other things, and they don't know exactly what it is that the U.S. policy is at this point, and so they want a sort of, a common front on the White House so that they can say exactly what their position is. And the third one would be sort of going along with that, having a point person lead the negotiation, someone who they can talk to, and not have 10 different people saying 10 different things, and them being completely unable to know what the hell is happening. And so in other news now, we have Nvidia taking a hit today as the US says they're going to totally ban the H20 chips, the AI chips from Nvidia. The only chips, the only AI chips that were actually left before there was another ban. I think it was on the H100 chips that were more powerful. These were sort of the chips that were a little bit less powerful, but still working with AI. And now the news today is that these are going to be banned totally. So Nvidia now taking a big hit on that. We're going to see the charts in a few minutes. And on the heels of that, of course, AMD also tumbling down for the same reason. Not just that Nvidia is going down, but also they have their own AI chips, which are probably going to be subject to the same kind of export bans. Now let's go right into the markets here. And as you can see here, the markets, a response that is, down about 1% for the S&P here, but a little bit muted when you consider the magnitude of the tariff increase here. And that is because now we're seeing, the first signs that the two parties here are starting to tap out. And last week, basically, you had China saying, never give up, never surrender, we'll never give an inch, and we'll never negotiate with the U.S. Now, this week, they're saying, okay, here are the conditions for us to negotiate, and perhaps one more week of this, and they will all tap out and be around a table negotiating a trade deal. So let's have a look here. The DXY 100 also down a little bit. Bitcoin holding still strong around 84, 85 area. Bitcoin has been surprisingly resilient in all this tariff saga. And we're gonna see the charts in detail a little bit later. The yields are down a little bit, and this comes after last week. At the end of last week, of course, the yield spiked up on the news of the tariffs, with China most likely leading the selling And, the expectation was eventually China is going to run out of treasuries to sell. And when that happens, then it will be only one way for the treasuries to go, unless, of course, other countries, other central banks start dumping the US treasuries. But we'll have to see what happens. But for now, treasuries, which spiked up last week, now going to the downside. Gold here still going up, 3,300 now for gold. But let's have a look here at closer look at the SPY. Let's look at it on the 15 minutes chart. And as you can see here, not much of a move. Let's see. Let me get rid of this right here. Not much of a move today. We have bounced since last week, of course, the dump, and now we're still holding steady. And the question is going to be now for the U.S. markets: is this a sort of a lower high, and then we're gonna continue down? Or are we going to see here some kind of consolidation, bounce, and breakout from here, perhaps to, either a lower high, or perhaps there is some resolution to this trade war that we don't expect, or that might not be something that the market expects right now, and then we go on to go and make new highs. We'll have to see, of course. This is going to depend on the news that will be coming in the next few days and weeks. Let's have a quick look here at Nvidia. Where are they? Here they are. So Nvidia here taking a substantial hit here on this news. Of course, this is pretty bad for them. But overall, when you look at the picture, they're still holding sort of around the 100 mark. The question now is, Nvidia has had this crazy run, right, from the last few years, and now are we seeing a sort of topping pattern here for Nvidia? And if that's the case, if that was sort of the peak of the AI bubble, then there is perhaps a long way down to go. But of course, the question will remain, is this the peak of the bubble, or is this just a temporary drawdown setback, and are we going to get some support somewhere in these level down there to then go back up? Time will tell. We'll have to see what happens in that regard. Let's have a look here at gold. Gold on an absolutely insane run, sort of like Nvidia. Gold is the Nvidia of the panic on the world stage here, and gold absolutely insane. This move here from this was just at the beginning of April, and we're up some 12% on gold. Huge market, like $20 trillion market for gold. So this is not something that moves like that much. This is not Bitcoin. This is not a shitcoin. This is gold. And yet a movement like this, it really shows sort of the panic that's going on the global scene. And there's only one way gold moves like that, and it is central banks buying. But as of today, let's have a look here at GLD perhaps. As you can see, overnight, gold jumping substantially here, a 2.5% move. And, we'll have to see when is gold going to stop? And I don't know that anyone has an answer for that, because the truth is, gold at this point, it's a barometer for the uncertainty on the global scale. And as long as this trade war continues, as long as there is a lot of uncertainty concerning Iran, the global, the geopolitical situation in Ukraine, in the Middle East, and this tariff war between the US and China, then perhaps gold can keep on running until there is some kind of resolution to all of these problems. Now let's see, let's have a quick look here at the 10-year. And, as we were saying, after this huge spike last week, now the 10-year is going down, but we'll have to see, is this just a temporary, because you can see we're making here higher lows on the 10-year. Is this just something that's temporary and then we're going to go back up on the 10-year? Or is this, this one spike, China has sold its treasuries, or the one that they had on hand that they could sell, and are we going to see yields go down or not? We'll have to see. For now, it is perhaps a little bit too early to tell, but if you look at sort of the long, the big picture here, well, we're really ranging in this area for the 10-year. And overall, this is nothing really spectacular. Yields have been going up for, ever since COVID. And now we're seeing some chop here between sort of 4.5%, 4% and 5%. And it's possible that we just keep on chopping up like this, chopping around. And for the time being, at least until perhaps the Federal Reserve announces some kind of rate cut. We'll have to see about that. But anyway, now this quick overlook. Oh, let's look at Bitcoin. We forgot to do that one. Bitcoin here. And, as we've seen Bitcoin in the past, taking support here on the moving averages, and this is the red is the 300, and this one, the blue, I believe, is the 360. And you can see how every time Bitcoin, it shoots up, then it consolidates for a while, it finds support here at the 360-day moving average. And then it shoots up again for like a 100% increase. So is this the support that we've seen? Perhaps we see another, dip here into the 360, and then we chop, and then it's off to the races for Bitcoin. We'll have to see. Of course, all of this is going to depend on the resolution of this tariff situation with the US, China, and the rest of the world. But now let's have a quick look at what the talking heads are saying.
Talks with the U.S. if the White House takes a number of steps, including showing more respect by reining in what one source calls disparaging remarks by members of the president's cabinet. A lot to discuss with regard to China, from the state of the economy to these ongoing trade tensions. Joining us this morning, China Beige Book CEO Leland Miller is with us. Leland, always good to check in with you. Thanks for the time.
Happy to be here.
So are these sort of conditions that are supposedly being set, you think they're really laying the path to actual talks?
Well, there's not that much holding back either side from pushing for talks. It's all about respect and making sure the leaders don't look bad. That's very easy to massage. The question always has to be, what does the U.S. side want out of it? At first, China was one of many countries they were going after. The plan changed, and it was going to be a all-encompassing China strategy. If you're going into negotiations, what are you asking China for? Are you just asking them to buy more stuff to narrow the trade deficit? Is there a broader China competition program, platform you're trying to push forward? I think the administration has to articulate this. And the problem is they've articulated every kind of option back and forth and haven't been very clear on what they actually want.
Right. Do you think they are narrowing the funnel, though, a little bit in these recent days?
Well, look, I mean, obviously, when you bring tariffs of the rest of the world down to 10% and China stays at 145, 120, 145%, then you're signaling that you're going to focus on China. On the other hand, if you continue to have angst from the bond market, you have worries about what's happening in the economy start to trickle through, then there are going to be some in the administration who are looking for an off-ramp and who want to try to figure out how you can move towards a situation where you can keep tariffs very high on China, but also get a bunch of goodies on the side. Again, I don't think they've agreed on what they want. Obviously, TikTok is hovering around this conversation, fentanyl cooperation hovering around this conversation. But the problem is the U.S. government and this administration has not yet articulated what do we actually want the outcome of talks to look like. Then if we knew that, then we could look at the possibility of whether talks make sense or easier to jump into in the short term.
Yeah.
And what we've said in this channel, is that, essentially the strategy of the tariffs was really to hit China. And the reason why it was this imposition of global tariffs was because they didn't want to single out China. And we've seen this sort of pivot, but was it really a pivot, or was it the strategy all along to say, okay, we're going to put the tariffs on everybody on hold, but China, who retaliated more than the other, but some other country retaliated, and they were still given this 90-day exemption, but that was not given to China because, as we stated on the channel, the reason why all these tariffs were put into place to begin with was to deal with China and try to bring manufacturing back from China to the U.S. And so now, this guy is saying, oh, well, what can they do to come to the negotiation table? Perhaps we don't know what they want. Well, I think, they're never going to say it, of course, because there is a diplomacy reason behind it and issue. You cannot sort of, be too aggressive in that regard. But perhaps they don't want to negotiate with China at all. And the tariffs are there to stay on China. And we will see tariffs being lowered to other countries, perhaps even other countries in Asia near China. And, there's a possibility that part of the plan that the Trump administration has here is not necessarily to bring, Nike manufacturing, or Nike is in Vietnam, but, sort of this low-grade manufacturing from China to the U.S., but perhaps move it from China to other countries like Vietnam, like the Philippines or Thailand, so that the U.S. is less dependent on China, and that other countries that will be more aligned in terms of on the geopolitical scene with the U.S. then get a share of this China manufacturing, and that would make China sort of less of a threat to the United States supply chains. And so when this guy say, obviously he looks like he's really in panic. And I'm sure, all those people, they have like tremendous stake here in seeing and easing in this China tariff situation. But my guess is that it might happen, but it's never going to be at the scale that they want it to be, or they would like it to be. They would want it to be, to be totally canceled and to revert back to what it was. That's not going to happen. And perhaps there will be a little bit of leeway here from the Trump administration toward China. But now that, they've done sort of the hard part, which was to stomach the sort of public opinion backlash that would come from such tariffs, there is basically no reason for them to sort of, scrap it and say, okay, now we're going back and there's no tariffs. Now, what's going to happen is now, maybe they will offer something here and there to sort of smooth things out with Xi Jinping. But overall, they're still going to pursue the same goal, which is moving manufacturing out of China, whether it is in the US or in other countries. But I don't think a trade deal as the one that he hopes to happen is going to happen at all.
U.S. restrictions on chip exports giving China an upper hand. We'll take a look at how Huawei is turning up the competitive heat on Nvidia after the break. Nvidia shares still lower and dragging down the rest of the semis after that surprise $5.5 billion hit tied to China chip export controls. But the restrictions may represent an opening for one Chinese competitor. Deirdre Bosa tells us why in today's Tech Check. Dee.
Hey, good morning, Leslie. So put simply, the latest controls, they boost Huawei while Nvidia pays the price. They ban H20s, but they do nothing to cut Huawei off from the tools and the components needed to build its own chips and systems. And this really hits on a theme that has been most threatening to American AI dominance this year. Necessity is the mother of invention. It's not that Huawei comes anywhere close to Nvidia's capability in terms of raw performance or ecosystem. It doesn't. And in fact, the H20 chips Nvidia was selling to China, they were inferior too. The reason Nvidia has to write them off anyways is because no one outside of China would actively choose to use them when presented with a choice. China hasn't had a choice, though, of course, thanks to those existing export controls that banned the higher-end semis. Now, just like DeepSeek, a Chinese startup that built a GPT-4 level model with far fewer resources, Huawei is pushing to offer its own alternative to Nvidia, and now with far more urgency. Moreover, the Chinese government and companies, they're even more incentivized to use them. Huawei, meanwhile, it's already getting better at doing more with less. Its latest AI infrastructure architecture, it essentially stitches together more hardware to create something that reportedly mimics the performance of Nvidia's high-end systems. This isn't efficient, it's not elegant, but it is effective enough to keep moving forward without U.S. chips. And that is critical because as Chinese AI at large gains more independence, that ultimately hits American leverage. Export controls, they only work if China needs what we are denying. Once domestic alternatives exist, the U.S. loses the ability to slow development. It also weakens U.S. influence in multilateral talks, tech standards, global supply chains. That is what is at stake here. Now, today's move, it's bearish for Nvidia in the near term as we see shares down 6.5%. But the bigger risk for investors is the long-term erosion of Nvidia's dominance and, more broadly, the way that American versus Chinese AI develops. Capital-intensive versus constraint-driven. The latter can scale faster, cheaper, and be adopted more broadly, and this could tip the AI arms race away from who builds the best tech to who builds the most accessible one. Really important to keep our eye on, guys, as these restrictions come out and as we look at the past ones that also haven't worked.
Yeah, we had a long discussion with...
Yeah, a bunch of nonsense here from the CNBC reporter, and of course that's not surprising. But of course, what's the alternative to just, give them the latest AI chips so they can build better AI than us? No, of course that's not how you're going to do it. There is no reason and no way that these export controls are going to be lifted, because if they were lifted, we know the ability that the Chinese have in terms of software. And if we were to allow them access to the most advanced NVIDIA chips, then they would absolutely blow OpenAI and Google and all those guys out of the water with their software. And there's been a lot of talk, and of course, CNBC, they're going to be really pressed because of the NVIDIA stock price and how they've been cheerleading NVIDIA all along this bubble for a while. But the truth is now the next step in AI is not going to be hardware, it's going to be software. And DeepSeek was the moment where we really saw the top of the market and, sort of the popping of the AI bubble, where everybody realized, oh, everybody is racing to get these AI chips. But the future of the race in terms of AI is not going to be the hardware, it's going to be the software. And in that regard, NVIDIA, there is no reason for them to pump more chips on the market when you have the sort of expenditure that big US tech companies have done, buying, buying the future production of NVIDIA for months and months and months ahead. And now everybody is realizing, well, actually, these chips, it's good, you need them, but the real breakthrough in AI is going to come from the software, not the hardware. And so, now, of course, this latest setback here for Nvidia and the export control on these chips is not going to help them. But unfortunately for Nvidia and the chip makers, perhaps we've seen now the top of this AI bubble in terms of hardware. And there is only one way for them, and it's going to be down, because as the software progresses, less and less hardware is going to be necessary, and the more efficient the hardware that Nvidia is going to produce in the subsequent generations of their chips, then the more the software is going to be able to deal with less hardware. And it's sort of like, back with the GPUs, that was the original business of Nvidia, when you needed this like very, very intensive GPUs. And then now the tech has gotten so good that, you have SoC boards, system on chips, where the GPU is already integrated with the CPU, and everything is essentially requiring less and less hardware to do the same, or if not better, all in terms of the software getting better.
Percentage of what's on store shelves necessarily. 20% of Target's cost of goods sold is from China. For Walmart, it's 15%. Both companies say they're trying to reduce reliance on China, but admit it's still a major source of products. Now, though the company reportedly just halted all imports from China, executives say tariffs have doubled the cost of their inventory. Dollar Tree, 32%. Again, this is cost of goods sold. At the same time, 8 out of every 10 products Dollar Tree imports comes from China. Similar story for home improvement store Home Depot, 25% of cost of goods sold. At Lowe's, it's 20%. Now, listen to this. Even specialty stores buy into this. Best Buy, 55%. Dick's Sporting Goods, 25% of what it spends goes to bring products from China to the U.S. Overall, it's hard for outsiders to track China purchases because of transshipments. Analysts say products could be made in China but sent to other countries for finishing touches. Listen.
Those numbers are completely understated, because no one is taking a Mexican import as a made in China item, because it's already pre-marked and pre-ticketed made in Mexico when it hits the shores of Mexico. So there's no way of finding and tracking those goods.
And, this guy makes a valid point. And by the way, this is exactly what I was just saying, that, all these products are manufactured in China, and that gives China a tremendous, upper hand on the United States because, of the dependence on supply chains. But what he says, that, there's a lot more that comes from China, and goods that are made in Mexico, actually they're made in China and then perhaps assembled in Mexico and then sold in the United States. Well, the world and the United States is never going to be able to cut China 100% out of manufacturing, because, China is the manufacturing hub of the world. But the point is that the less dependent on China you make yourself, the more resilient you are in terms of global supply chains. If something was to happen in China, like it happened in Russia and Ukraine in regards to Taiwan, and having, other countries sort of assemble things and sell things in the U.S., even if, the original pieces of it come from China, well, that still is the deleveraging the sort of the stronghold that China has on the supply chains, because at the end of the day, those supply chains can move. And if you're making a product, let's say in Mexico from Chinese part, then perhaps little by little, you can start sourcing these pieces from India or from other places, and in the end, it doesn't give the government of China as much of a upper hand with the United States if you have sort of another country that is a middleman between the two.
trade negotiations, and I want to go back to Nvidia. That the $5.5 billion charge that works out to be about $13 billion in sales on these lower end chips. Again, Nvidia was not allowed to export its higher end chips to China. It was the lower end chips. So that you do the math. Out of the total data center revenue, that is only 7% of the anticipated revenue this year for the company. Out of $182 billion, it's just 7%. So China is a very small part of.
And as you can see, it is down 7% here in the market. So the market is pretty good at figuring out exactly how much of their revenue is going to be impacted.
This is a critical way of depriving China of any resource in its artificial intelligence advancement. Because if you ship it there, they take it apart and try to steal whatever is in that device, that chip. And this will also be a negotiating peace sliver with all these other nations that, again, with DeepSeek, how did DeepSeek get those chips? Right? They were shipped via, what was it, Taiwan? This will be a discussion. You ship nothing. If you trade with us to Vietnam, to Japan, to South Korea, you trade with us, you send any of our technology to China, we cut you off. And so I think that there is the opportunity to isolate China in a greater way. There were the sanctions on the Teapot refinery, who was buying oil from Iran. That's very small. But you're getting word that China is open to talks if the U.S. shows respect. The nation has named a point person for these talks. Play hardball, because the deal that Trump got during his first term, they never abided by it.
Right. And the damage has sort of been done with respect to the markets. Now they're just waiting to hear what comes next. And with respect to Nvidia being sort of the China business being a small portion of it, it sounds like what I'm hearing from you is that it's a good thing.
It's worth looking at it not as a stockholder.
Right.
I own funds, not stocks. But looking at it from national security perspective, and that's what we're really talking about, is that it's a worthy sacrifice to cut off China. You want it, you can't have it, is kind of the negotiating message.
Meantime, the markets, though, they see something like this, Lydia, and you can see that announcement came out last night. Futures were down, NASDAQ futures were down, and the market is down today. So the markets digest it, a little bit differently, mixed in with some of the uncertainty and not having a firm deal yet with Japan or maybe another ally. And investors are still hesitant.
But investors are hesitant. It seems like they're really mulling over this NVIDIA news. But I was reading a note from Wedbush. They're still very bullish on tech stocks long term, so they're not really concerned in the big picture. And as we know, the markets are really sensitive. This is going to be a volatile period for the remaining months to come. We expect these negotiations to last well into and through the summer. I just have to marvel at kind of the 4D chess that is going on with President Trump at the helm, kind of leading these negotiations with Japan today. And Dagan, more to your point about, working out the deals with who is going to trade to China, making sure that people are not selling or exchanging our IP or corporate secrets with China. There's a lot to talk about with Japan coming to the table today. Japan, for its part, they're not happy with how much money that they're spending to host our military.
I can't believe they have the pump on there, and they're not even asking him any question. What the hell is going on?
To devalue that on the international stage to make their products more attractive to us. And also, I want to point out that we've spent a lot of time talking about the steel industry for obvious reasons. The Nippon U.S. Steel deal that's coming out of China. During the course of my reporting, talking to the steel companies and the steel workers, over and over and over, I heard them raising concerns about how Japan...
Announcement on trade deals very soon. But you can bet that these trade deals are not going to include China.
So there is a lot here that we can reckon with Japan and come to the table to shore up our trade with them. But then also in the bigger picture, tie that all together when you think about trade with China too, and multiply that out over the 130 countries that they're navigating all this. It seems like each day, although the markets are nervous, the picture becomes more and more clear that there really is growing leverage to put China on its back heels.
So the kind of million-dollar question, Anthony, is with respect to the markets, is the worst behind us?
Well, I definitely think that the worst of the fear is behind us. Now, what happens with the actual asset prices, I think it's impossible to predict what's going to happen in these trade negotiations. Right. But I do think that if you go and you take a look, Ben Carlson had this great analysis, and he showed that after the stock market falls 15%, if you look forward 1, 3, 5, and 10 years, the 10-year return over a decade after the stock market falls 15% is 185%. The 1-year return is 15%. And so usually people, when they get fearful, what do? They start selling. My portfolio is going down. I want cash. But all of the data tells us throughout history that after the stock market falls is a good time to buy. Unless you think the stock market all of a sudden is going to go away, the United States is going to lose its dominant position in the world, or somehow American companies are not going to benefit from tariffs, which are pro-American business, then you should be actually looking to buy stocks, not sell the stocks now. And I think that as investors kind of digest this news, they'll start to do that, and you'll see the markets recover.
Yeah, and we've talked about, David.
The pumping the market. What he does best.
As a result, I didn't come to you because of that. But I just wanted to get your perspective on how people can cope with some of the losses they've seen if they don't have the time horizon of a younger person. I mean, the market's come back substantially. It's not where it was pre-tariff, pre-Liberation Day. But having said that,
Pre-Liberation Day. Well, how liberated do you feel now?
The left, of course, that you killed the retirees.
How you can divert your mind and cope with what's going on is write a letter to your congressman and senator, particularly the senator, and saying, get this damn tax cut deal in. Because that, I think one of the things that's dragging on the market, of course, there's news from Nvidia and other things that are dragging on it. But one of the things is the fact that there's this rumor going around that Trump might raise taxes. And we're going to get into that later on in the show. But honestly, I think so much of what's happening in the market today has things to do with stuff other than directly the trade talks that are going on. And I would put taxes in there. But, I think most people have gotten the message to diversify as well as they can. There have been some terrific deals over the past couple of years on bonds. So people have a lot of bonds in their portfolio. And the only good thing about rates going up is that they're making more in their dividends. Right. So I mean, then there are, I think speaking of dividends, you have private dividends as well. And there are some people that are taking the advice of strategists who include that in their portfolio. I think generally speaking, what Dagan was saying about going for index, some kind of fund rather than picking individual stocks is the way to go. You just can't do it these days.
I was just making it clear.
The worst advice that you could ever hear, and of course it comes from the TV, put all your money in index funds. Well, you get very little return, and then when the stock market is going to dump like you've never seen, then you're going to lose everything. This is the dumbest advice you could get, and of course, it comes from mainstream media.
To be your friend. Yeah. Time is your friend, even if you're close to retirement.
You also talk about diversification. Listen, if you were somebody that bought gold, let's take a look at where gold is trading right now, because that's been a trade that's working out. It's up $103 today. That's 3.2%, $3,000, $344. Wow. Obviously, gold has been a safe haven for investors that haven't wanted the riskier assets, and it continues. It's also an inflation hedge for those who are worried about inflation to come potentially from tariffs or something else. This has been a wild trade if you're in on this one.
I am.
Coming up, Democrats are busy planning field trips to El Salvador to vouch for an alleged MS-13 gang member, why they might want to reassess their priorities. That's next.
Let them not reassess. Let them do it.
This is just coming into our newsroom. Senator Chris Van Hollen has landed in El Salvador. He's going there to check out the MS-13 member. He says, this is the senator, he says, quote, I look forward to meeting with the team at the U.S. Embassy to discuss the release of Mr. Abrego Garcia. I also hope to meet with Salvadoran officials and with Kilmar himself. He was illegally abducted and needs to come home. not true. He was not illegal. Okay, that's my opinion. What do you say, Melissa?
Well, I just think it's so tough. You showed the video. There's definitely public support, and I think that's because we have the court of law and then we have the court of public opinion. And much of the media has been decrying this, that this is a father who has been unrightly, exported to a different country. He needs to be brought back home. This is not his home. He entered into the U.S. illegally. Right. We've seen that he is affiliated with a gang that is a terrorist organization. And the idea that a senator who represents the entire state of Maryland wants to put the needs of one immigrant who is here illegally and associated with a terrorist organization over his entire state should draw real anger from the people in that state and from the United States.
2 judges said he was a member of a gang. The gang is a terrorist organization. He had a deportation order on him when he was taken to El Salvador. He was not abducted. I don't know. What's this world coming to? Let's get to the Wednesday trivia question.
And this is, really strange. And you wonder, what are the Democrats trying to achieve here? It's, they can only lose. And, when you're seeing everything happening with the Trump administration, the trade war, and if the Democrats did nothing, absolutely nothing, if just kept their mouths shut, then the public opinion would probably turn on a dime against Trump. But now you have the Democrats coming out there and making sure that people hate them more than they hate Trump. This is completely, impossible to understand. What is this guy trying to achieve? I mean, of course, perhaps he's trying to make himself the center of attention here, taking a trip to El Salvador. But in the end, how does he think it's going to play out for the Democrats? Perhaps for him, it will be good for his local elections. But for the Democrats overall, you have this guy in Congress who's taking a plane, trying to bring back someone who was in the country illegally, that has been returned to his country of origin, so that who is a gang member, by the way, and he's trying to bring him back in the United States. This guy is not a U.S. citizen. You had the Democrats in power. You had Joe Biden in the White House not lifting a finger to bring back U.S. citizens who were imprisoned in Russia and in Venezuela. And now the Democrats want to go out of their way to bring a Salvadorian back to the United States who was in the country illegally, who was a cartel member or a terrorist organization member. And they think this is going to play well with the public opinion. And of course, it's not going to play well at all. It might play well with the crazies on the left who don't really think about these things in rational terms, and they just want to sort of drum their, the line of their party. But with the overall public opinion, this is not something that is going to get them elected at the next election, and it will be used against them whenever the campaign is going to be going on in the midterms. And even in his own election, in his own congressional election, eventually he's going to be running into some of the media questioning him. Why did you do that? Why did you go out of your way to try to bring this guy back in the country? And I don't know that he's going to have a very good answer to that. We'll see what happens with this guy. And of course, he gets his 15 minutes of fame, but maybe this 15 minutes of fame will be the end of his stay in Congress. So overall, we're seeing the talking heads, especially on CNBC, being pressed about the Nvidia share price more than they are about the announcement of the 245% tariff on China. Perhaps the fact that China is seemingly coming to the table a little by little toward negotiation with the White House is a reason for that. And the reaction of the market here pretty muted considering the magnitude of the news. We'll have to see how this all shakes out. But as for now, we will leave it here. Thank you for watching this video. Don't forget to subscribe to the channel and leave a like. And I will see you all in the next one.
Hit me with that like and sub to the channel. Hit me with that like and click the effing bell. Click that bit alright. The algo recommends for she go like. The algo knows you are. Hit me with that like, subscribe. effing bell.